Bada bop bop bop. What was that? What is bada bop? Oh, hold on. I read that, put that wrong. Let me type this in correctly. Yo, what's up, bro? Hold on, I gotta type this in correctly. John. What's up, bro? What's up? Make sure I pin this. Whew! What's up? What is up? What's going on, guys? Great day in the market today. I actually did not trade, by the way. I had a call this morning that went for like 3.5 hours, man. And then like after that, I saw the market. I think at that time, the Dow was around like, at that point it was down like 300. It actually closed. I mean, they say it closed 300 points lower, but in reality it didn't because it was up around like 200. So factoring it was around like down like 500 points for the day. I'm looking like, God fucking damn. Like, man, what a big day. But, actually, let me say this right now. Market was choppy. Choppy? Market wasn't choppy, man. It's funny enough because I think only Apple and I literally just read like 20 minutes ago. Oh, man. It was Apple and, oh my gosh, where is it at? I literally just read it. Oh, there we go. Apple and Boeing were the only positive things in the Dow for today. I thought that was very interesting. So oh yeah, you guys see my shirt. It says, we'll grind for change. So it's actually a playback because I am going to start bringing back merch. I think like October. I said October. I'm thinking more like somewhere like late October. I'm going to start bringing merch again. But again, like as you can see, it says we'll grind for change. And it's hands right here on the side of it. So pretty much the idea comes from someone, a homeless person, right, holding up a sign, asking for change. Right, but to play on, and the reason why is because it's will grind for change. And at the end of the day, if you want to change the situation, you gotta you gotta grind for it. That's the only way you have to really go about changing it. You can't change the situation by just like saying you're gonna change. You gotta take action. Very important. Speaking about action, let's talk about this. Get to the bag brunch that just happened this past Sunday in New York. That shit was fucking amazing. So I flew up to New York. Literally flew in there for the day. It was amazing. Me and my wife killed the event. Shout out to Glass. Shout out to Caleb. They put on together an amazing event. Man, one for the culture, bro. One for the culture. It was something. If you missed it, you missed a very, very special good one. We touched on mental illness. We touched on time management, day trading, real estate, Airbnb, literally everything, especially credit, getting fun together. Because at the end of the day, it doesn't matter how you get the money, right? Well, it does matter how you get the money. But at the end of the day, when you get the money, it's not about getting the money. It's about what are you going to do with the money. Right, a lot of people, they get caught up with like, hey, I just made like 100K, right? Like I'm killing right now. Actually not. But besides that though, yeah, all right, congrats. You just made $100,000, but what are you going to do to flip that money, right? If you don't have no plan to flip that money, you're going to be asked out. And then you're going to be back to saying to yourself, man, I wish when I had that 100K and so forth. You don't want to be that type of person. But before we actually move forward, I do have to give a disclaimer. Anything that's said here today is for entertainment purposes only. Do not act on any of these. Do not act on any of these without speaking to your financial advisor or doing your own research. Again, anything that's said here is for entertainment purposes only. Now that I got that out the way, we have a special guest. Saya, what's up, bro? What's going on? We got a special guest today. Speaking about Saya, shout out to Saya. He owns a luxury transportation business, and I say it's phenomenal. That guy is phenomenal. The other guy reach out if you're in the New York area, if you're looking for luxury car rentals. Saya is a guy who you want to reach with. His Instagram is SIAH_Saint.Patrick. Just like that. So that's definitely someone you wanna link up and check out. But as I said, got a special guest today. It's gonna be dope. But real quick, I want to talk about the markets for a quick second before we actually bring our guest on. So as I said, the Dow was down today. The market's been down across the board. So pretty much we have FOMC tomorrow, right? So FOMC is this happens every 6 weeks, but right. This happens every 6 weeks, but this event is extremely important because it affects how your wallet is going to play out, right? It's going to speak on, FOMC is going to be Jerome Powell and the Fed. They're going to come out and say they're going to raise rates, or they're going to lower rates, and so forth. And what's going on, we clearly know that they're going to raise rates, 100%. Kadeem, what's up, bro? They're going to raise rates. So the thing about it is that it's actually being discussed, are they going to raise rates by 75 basis points, which is 0.75%, or if they're going to raise it by 100 basis points, which is an actual percentage. Now, I think that they're going to raise it by 75% basis points. It's possible they may raise it more, but regardless, though, the market is going to tank. And the reason why is this: I feel like if they raise it by 75 basis points, we're going to have a short term. We're going to have a short term buy, long term sell. And the reason why I feel that way is because I feel that the opposite. The reason why I feel that way is because investors will see that yes, the Fed, they're doing what they need to do to fight inflation. However, we have to wait until October 13th to see the actual cause, not the actual cause, but the actual answer if inflation is actually coming down or not. So our next inflation date is October 13th. If you guys do not know, CPI, inflation, same exact thing. Now, if it's 100% basis points, I think that we're going to have a rally and then we're going to have a drop. And the reason why, because I feel like investors are going to think that the Fed is acting too aggressive. They already are. They're acting too aggressive when it comes to raising rates. And raising rates is not really good, right? They say it's a way to fight inflation. And the thing about it is this, like, you can't fight inflation when you have negative rates. And as of right now, you guys may say, hey, we don't have negative rates. We kind of do because inflation is so high and the rates right now is so low. It's pretty much like a negative, if you want to put it that way. It's like a little way to go about doing it. Man, what's up, bro? But yeah, back to what I was saying. So be mindful of that, traders who are looking for tomorrow. We're definitely going to have a nice little consolidation before 2 o'clock. And then once we have that breakout, it's over. However, the most important thing about FOMC tomorrow is, JJ, what's up, bro? The most important thing about FOMC tomorrow is, yes, it's the rates. However, it's what Powell says at 2:30. What Powell says at 2:30 is going to be the actual move. So again, quick tip for you guys that are traders. If you're looking to get into the market, do not get in at 2 o'clock. Wait until around 2:45 when that 15-minute candle closes. Once that candle closes, you have a better idea of where the market is going to go for the rest of the day, and as well as to aim in for Thursday's move. So that's a quick tip for you guys who are trading and looking to profit in the markets. It's going to be dangerous. It's going to be real dangerous tomorrow. But let's see, where's our guest at, man? Let's see if our guest is here. Let's see if he's here. See that you joined in. Hit that request button, bro. Let's get you jumping in here. He didn't hit that request button yet. I'm gonna give it a little second. I know it's a little delay. But besides that, what you guys got going on? What you guys got going on? Quick Q&A real quick before he tap in. There we go. Get our guest in. Special guest here today with us. Today's guest is a king. Oh, goddamn, I was getting ready.
What's going on? I heard you got a request. Now, do you think?
Yeah, that's my mistake. I didn't know if I pressed it, but anywho, let's say it again. We got a special guest here today. Today's guest is a king who not only talks the talk, but he also walks the walk. He's an investor. He's a New York realtor. And he's a serial entrepreneur. So let's welcome Jaleel Muss. What's up, man? Let's clap it up.
What's going on?
I need like a button in the background or something to clap it up.
You need like a little buzzer going on when you put your guest? What's going on? Thank you for having me.
What's up? How's everything?
I'm feeling good. How's it going?
I'm doing good over here, man. Good to have you on. Now, before we actually continue, I just want to say this because you already told me right before we jumped on. You said you're not holding back.
No.
You said you're not holding back. So anyone who has questions with real estate, investing, anything like that, throw him out there because he definitely says he's not holding back. So if you're not holding back, it's gonna be a good one. What's up, man?
I'm chilling, man. I'm out here working actually. Crunch some numbers. It's Tuesday, so we got to get ready for this week as far as like what's available in the market.
Right.
Things to do with my properties, making sure my clients are good. So I'm just working on this Tuesday. It don't stop really.
Yeah, I appreciate your time. So quick question, right? Now, I'm asking this because, like, again, I see things from an investor standpoint. You see things from an investor standpoint as well. But it's the same, and it's an asset, but it's not the same field, right? It's obviously it's different ones. You're dealing with real estate. I'm dealing with market as well as stocks and trading. Now, how bad do you think the current real estate market is?
I think the headlines are a lot worse than the headlines hype it up to be a lot worse than what it actually is. So if you read the headlines, you out here thinking, like, all right, we waiting for this crash. We waiting for 2008. That's not the case. If you're really in the field, then you know what's going on. So they'll say that there's a dip coming, but they've been saying it since 2018, right?
Okay.
So, and the broken clock is right at least twice a day, right? So eventually somebody's gonna be like, yeah, I called the crash. But if you've been calling it for 2018, you're not right. Now, it's not to say that real estate prices won't go down. It's more so to say that they're correcting themselves. Okay. And the main issue is that there's the rates have been going up. We all know that. You
Mm-hmm.
talk about it all the time, right? You just been talking about the rates going up, but prices haven't been coming down like that, right? If that was the case, people would be outside buying homes. And the second part of that is there's not enough supply out there. So when the prices do come down, people are gonna just scoop it up because there's not enough supply to meet demand that's out there. So it's not in a bad place right now. The rates make it where it's a little bit unaffordable for most people, but there's not enough houses out there to meet the demand of people that want to buy.
That's very interesting that you say that. I obviously see a different point of view when it comes to that. But so what's like an ideal thing that someone should look for, even when it comes to buying a house? And the reason I'm asking that because again, if you're saying that the demand and the supply, you know, that's available, rates are not coming down, and so forth. So what trying to ask this correctly because I really want to really point this in. What's the best thing that someone should look at, especially from not even just New York, but in general, right before buying a house?
They should look at affordability.
Okay.
Like what you can afford. And first you gotta know where you're going, right? You gotta know what is the end goal? What do you want to do? Like, do you want to be a landlord? Do you want to own multiple properties? Or are you solely focused on your primary residence? You want the backyard for your dog, you want that nice kitchen, you just want to live alone and be at peace. What's that end goal look like? Then because listen, look at it this way. Numbers don't lie. So if you say I want to own multifamily properties, it's simple. It's just like, yo, do the numbers make sense? Does this property pay for itself? The income that's coming in, will it take care of the mortgage and all the expenses? Simple as that. There's no emotion involved. Now, if you're looking for your primary residence, that's a different story, right? That's like, yo, can you afford this mortgage payment on your own because you have no tenants? That's the main thing you should be looking for, affordability. Determine which end goal you're going for, and then hone in on affordability so you don't lose that asset once you get it. Everything else is secondary.
Okay, so with that, right, let's say someone's going for like a multifamily home, right? Because everyone hears, hey, what you need to do, you need to buy a 2-family house, live in one, rent out the other one. How realistic is that? Is that something that's like really a walk in the park, like social media make it seem as if it is, or is it a little more complicated than that?
No, it's a little bit more complicated than that. And it definitely, I'm not going to sugarcoat it, definitely depends on your area too. So if you're in somewhere like New York, specifically where I am, like Queens, Brooklyn, that type of area, the 2-family homes, the majority of them do not make sense. The numbers don't make sense. So if the 2-family home is going to be, let's say, $800,000 to $850,000 at minimum, and you got a 6.5% interest rate, tax in these areas around $5,000 to $6,000, insurance is going to be about $2,400 for the year. You're looking at a mortgage payment of around $4,500 to about $5,100.
Right.
Now, that 3-bedroom unit may bring you in $25,000 to $3,000 in New York. You're still going to have a decent payment, right? Like on your end, but there's only 2 units if you're living there. And if you're not living there, you're probably going to just about break even. So if I'm being honest, 3-family and better, if you're really looking to invest, it's like that's where the numbers start to make sense. As far as the work, if that's what you mean, the work to get it done, it's definitely possible. Like there's programs out there, and we could touch on that later, like that will help you get inside that 2-family, 3-family, 4-family home, and with a little bit, with as least amount of money out of pocket as possible, and you can acquire the home. But the end goal is to make money. That's why we're here, to make money. So there's no point in buying that 2-family home and then you're still stuck, and because you just gave yourself another job. Now we're not trying to do that. We try to make sure that it makes money, it's on autopilot, and then you can move on to the next thing, the next business venture.
So what's the best route? Let's say again, I'm looking for a multifamily house or a 3-family house right now. What's like a realistic step-by-step things that I need to accomplish or have set aside for me to actually go and get that crib?
Okay, besides tapping in with Jaleel, the next, what you should do
that's the first thing. Let's
make
sure we got that set in. That's the first thing we do.
You got to tap in with somebody that knows what they're doing. I always say, and some people may, feel some type of way about this. If you're looking to buy a multifamily home, the realtor you're working with should own multifamily properties. And it's no shade to the people that don't, but I have an experience where I can tell you what to look out for besides just the finances, besides just opening doors for you. Oh, there's multifamilies in this area. I come from it as I live it. I know it. So you should get a realtor who's done what you're trying to do. Now, if you're trying to rent a luxury condo, get a realtor that rents. They know the high rises in Manhattan. They know the new condos in Brooklyn. That's perfect for you. But if you want someone if you're looking to get multifamily property, you'll be at more of an advantage if the realtor you're working with has done that already. He could guide you in a much better, or she could guide you in a much better place than
Absolutely.
just working with somebody who hasn't done it before.
So, a quick question: what you're saying is that if you wanted to get better within a skill set, within a craft, anything you're doing, you need mentorship. That's what I'm hearing. I'm hearing you need someone who has the experience as well as receipts to back it up.
100%. It's not just the opening the doors and here's a property. It's
Right.
guidance. It's like, yo, this is how you screen tenants. These are the repairs you need to look out for. These are the programs you can use to get the most money. Government programs. These are the options you can use to rent it out if you don't want to use those programs. Peerspace, Airbnb, short-term rentals, medium-term rentals, traveling nurses. Like, someone who doesn't own properties won't be able to tell you that information. So it's mentorship, it's guidance, along with helping you get the property.
Right. So, oh my gosh. I just want everyone to, I want to take a quick break for a second on that, but I want everyone to really get that and tap into what he's saying. You don't want to just go out there and just buy something because someone's telling you to buy it. You need mentorship. You need someone, and as he said, who has the receipts of the thing that they're saying that they're able to accomplish and they're able to get for you. If you're dealing with someone who doesn't have that, it doesn't matter if it's a guy or a female or whatever you want to be. If you don't have someone who has that, then you're not going to get it done. You're going to be wasting your own money and just back to ground zero. We're back to zero. So that's very important you said that. Now, one touch base goes to something personal before we go back to the business side of it. So personal wise, I understand that you do have a daughter. So I want to know, how has it been? How has it been? Sometimes I see you bring a daughter with you. So how has it been traveling with your daughter and you still have the work done?
Yeah, she comes on the jobs with me. People cross the street when they see her. That's my protection right there. And the best thing about it, she doesn't talk. So it's like she's there. My dog is dope. She's 3, she's Doberman. And yeah, sometimes bring her to the job sites. If I'm running around, just to bring her around for the day, somebody keep me company. I love it. It's perfect.
Right, but now,
go ahead.
You said, no, say it again. You recommend what?
I recommend everybody get a dog.
yeah, I'm actually in the process of trying to get one myself, me and wife. But besides that, though, so let's go back into the business side of it, right? So now we hear that people, when they want to go to buy a crib or any type of property, the first thing you do is go to Zillow, right? So like, let's touch on Zillow and let's touch on the truth about it, because a lot of people, and you hear all these stories like, Zillow's overcharging people, they're undercharging people. It's not real property they're getting for it. So what can you break down about Zillow and to give pretty much the truth about it?
So there's a few things with Zillow, and any of those real estate apps, whether that's Redfin, Trulia, whatever, Realtor. They first, when you're looking at that property, is delayed, right? So we get access first. So what we put in, what we call the MLS, then waterfall to Zillow and all those other apps. And the estimate is not going to be right. Sometimes the taxes are incorrect because it's not pulling from the right area. So on that end, you're not always getting the most accurate information when you look at those real estate apps. On the second end, if you're using them to like sell your home, for example, the fees are just ridiculous. Like by the time you walk away, they tax you on everything. They tax you on the agent side. They tax you to list the home. You better off just using the agent and having a more personable effect, because they're going to list it for what they're going to list it for, what they believe they're going to advise you, and you're not going to get the true one-on-one relationship as if you would hire an agent to help you list your home. To walk through it and be like, hey, you know what, you should paint this room, and you could probably get some more money. Update the kitchen, because that's what they're looking at. Like when buyers come to walk in, you're not getting that. So you're doing yourself a little bit of a disservice if you go that route. May sound biased here, but it's best to hire an agent to help you walk through that process, especially if it's your first time buying.
No, absolutely. That actually sounds spot on. Funny enough, because it sounds as if like Zillow is more like a YouTube, for the real estate market and that kind of stuff. It's like you don't really know what you're doing, but you just go. It's pretty.
Yeah, like the pictures look nice. You can scroll all day long. Listen. I scroll on the houses that I can't afford yet too, right? I'm like, oh, this is nice. But it's not reality, really. And it doesn't match up with your budget and what your agent and you worked on as far as your end goal, what you want to accomplish. You need a little bit more than Zillow.
So what exactly would someone need? Really, I mean, besides yourself, someone like you. Okay.
So,
matter of fact, let's do it. Let's get some actionable steps. What would they need to even work with you? Because I'm sure no one can just work with you, or even any type of New York State realtor, any realtor overall.
Yeah, I mean, you should interview a realtor the same way you interview anybody else, right? You shouldn't just pick the first person. Like, you want to know, do they work in your area? Do they know the neighborhood that you want to buy in, right? Like, if you're familiar with New York, there's no point in hiring an agent that lives in Suffolk County, deep Long Island, to help you buy a home in Brooklyn. It's not to say that they can't, but their agent in Brooklyn, they know the back streets. They know which block is good. They know which block is hot. They know which developments are coming in that area. So if you should interview that agent to see, do you know this area that I want to buy in? Second, do they know the product or the program that you want to use to purchase? Are you a first-time home buyer program? How many first-time home buyer programs did they close in the last 6 to 12 months? Are you conventional? Are you an investor? Are you self-employed? Can they help you find a lender who caters to self-employed people? If you trade stocks and you trade options all day long, and you're not operating with a W-2, you're in a different situation. Can they guide you in that situation? So you don't just take any realtor. You outline these things as far as what your current financial situation is, and then you ask that realtor how they can help you based on your situation, because they may not be right for you.
What is like a financial number? Let's go across the board. Like, because you hear a lot of people, and you say you touch on this later. I guess we can do it now. Credit score wise, what's like really recommended? Down payment wise, program wise, and all those type of things. What would it be?
Okay. I say let's start with the credit score, because I think that's most people's fears of why they can't buy a house. The main thing would be to make sure you pay your bills on time. If we're just throwing a number out there, 630, and you'd be cool. But there's so many programs out there that don't have a minimum credit score requirement, but what they do require is that you pay your bills on time.
Right.
So you want to make sure that the last 2 years you've had on-time payment history.
Last 2 years.
Last 2 years. That will put you in a great position. And here's the things that most lenders are going to look for. Regardless of what program you're using, they're going to look for last 2 years of your W-2s, last 2 years of your tax transcripts, a valid state ID, the last 3 months of your bank statements, the last 2 months of your pay stubs. At minimum, those are the things that they're going to ask for. Now, depending on your financial situation, they're going to ask for a little bit more. For example, listen, you get a free credit report every year, right?
Right.
Pull that report. Is your middle name correct? Because when they run the name and your report, if they see any discrepancy, they're going to ask you to correct that, or at least explain what it is. If you have some student loans that you haven't paid, they're going to ask you what's going on with this. So you could get all those documents gathered from jump. That by the time you get there, it's going to be a lot less frustrating of them. Hey, we need this, we need that, we need that. At minimum, you need those 5 things that I just mentioned.
Oh, goddamn. But that's very, very, very detailed. I actually didn't know that the credit score could have been that low. I actually thought you needed like a 760 to actually get a crib.
I mean,
you said that.
You'll get a better rate, no doubt about it, but it's not going to stop you. So a lot of people think that they can't buy a house because of finances or because of their credit score, but it's more so the fear, right? So it's their fear. People fear rejection more than they fear the actual rejection. The thought of rejection is what they fear. Is preventing them from taking action to go start and figure out, what is my credit score? How much money can I use to afford to buy a house? So there's programs. I bought my first house with $7,000, and my credit score was not good.
What?
Yeah. So, and I'm saying that to show you that there's options out there where you don't need a ton of money. That house was $630,000 out of pocket altogether. I gave them a check for $10,000 for a deposit, and at closing I got a check back for $3,000.
How'd you get that?
So that was through the NACA program.
Okay, so NACA is one program that you recommend for someone who needs assistance.
Definitely. Yeah, and I'm not sponsored by them. I don't make any money off saying their name. That's www.naca.com. Somebody could type that in the chat if they want to help anybody. But that program, no down payment. No, the funny thing about the Bank of America thing is going on right now.
I was going to ask that.
So
we're going to get there.
and here's the trick, and I never commented on it because it's funny, because NACA's primary lender is Bank of America. So this isn't new. So NACA does no down payment, no closing costs, no attorney fees, no appraisal fees. Now, this new program that Bank of America is pushing is the same thing. So NACA is their middleman. Essentially, the program what Bank of America has pushed out is cutting out NACA.
Yeah, hold on. Let me just write it in the chat, naca.com. Someone just wrote it. I just want to make sure we're going to spell it correctly.
Yeah, that's naca.com.
There we go. Yeah.
So, so these type of programs have been out long time ago. They're not new. But that specifically is what I used to get my first home. So
Okay.
that home was $630,000. It was a 3-family. It is a 3-family actually, 9 bedroom, 6 baths, and I used that with $7,000 what I paid, and I was profiting at the time because I even had the rent where it needed to be. I was making net $600 per month. It's a little bit more
net.
now, but yeah.
we don't gotta throw the exact numbers up. I'm not gonna do that to you.
Yeah. Listen, I give it up because I want people to know what's possible and really truly like what's out there, the good and the bad. So I don't mind talking numbers at all. Like that property, I gave you the purchase price. The mortgage amount is $3,500. As I mentioned, each unit is 3 bedrooms and 2 baths. Now, if you know what New York rents go for,
a lot, over $3K, just about.
For a 3 bedroom, that's $3,000. So if you had each rented out for three bedrooms, you're talking about $9K, $10K for that one property, and you mortgage is $3,500. Now you have a few expenses, right? So you got in New York City, the owner is responsible for their water bill. Water bill is going to be about $120, $200, depending on your tenants. Each unit pays their own gas bill. Each unit pays their own electricity. I pay common electricity, the whole way, which is about $40 per month. And then I put money aside just in case anything goes wrong. Whatever's left is up to me. And then there's options of renting it out. It doesn't have to be traditional tenant. Like if you go to, if you type in Social Security services like city thefts, what they're paying, the government, they are paying over $3,000 for a 3-bedroom. And that's like the government paying that. That's on time every month. Then there's the option of renting it out to, as I mentioned earlier, short-term rentals with traveling nurses. You could deal directly with the healthcare facilities and get paid by them because they get paid per diem. They get a stipend for their expense and their housing, and you gain from $5,000 to $7,000 from one unit there. You could do the Airbnb method, which a lot of people know about. You could do the pair space method. So there's so many options when it comes to real estate. You don't have to just think about the traditional, I'm going to rent it out to a family. You could just expand way more. It's way bigger than that now. Way bigger.
Right. So hold on, we got a quick question. Someone asked, what states are best for the 1% rule? So I'm not even sure what the 1% rule is. So if you do have that answer, can you also educate me as well on what the 1% rule is?
The 1% rule definitely does not work in New York, in my opinion. And I think it's a bit outdated. I know back in like 2017, 2018, bigger pockets, they were raving about the 1% rule. More so, I would look at, first of all, let's identify the states. South Carolina, Cleveland, those states are definitely strong. And those are states that I look at personally. Atlanta's been on the rise, so small pockets in Georgia, not necessarily Atlanta. And instead of conforming to a 1% rule, look at more so, if you type in Google, bankrate.com and PITI, that's principal, interest, taxes, insurance. Type in PITI calculator. This will give you the accurate number of what you'll pay for the mortgage. And you should never use a strict rule when identifying any property. You should budget it correctly because you never know. You don't want to put that offer in and then it's too late where it's like, I want the 1% rule and didn't work because each market is different, right? So like, for example, you could do the 1% rule in New York and let's say the numbers work out. Oh yeah, I should profit $300 per month. But New York tenant laws are different. What happens when you have a vacancy or that person hasn't paid rent in 2-3 years? That 1% rule doesn't mean nothing. You need to account for that. Oh, I'm buying a property in New York, 10% for vacancy. I'm buying a property in South Carolina. I know they get them out in 30 days. It's a little different. So, I don't stick to any rule like that. It's more so each property, each market is different. Figure out what the mortgage is going to be. Add 5 to 10% for the vacancy rate. Add another 5 to 10% for capital expenditures. And those are big ticket items such as the roof being repaired, the boiler, the hot water tank, things like that. That way, if those things do come up, you're not coming out of pocket. You already put that money aside. And that's how you analyze the property properly.
He's spitting. He's spitting.
Listen, if you have any questions, you get them off your chest.
Yeah, spitting. All right, I got a question. Well, I guess you say you want to throw it out there. So how many properties do you currently own? And are you strictly in New York?
Nah, I'm out of state as well. I'm over 11 units at this point. And I diversify.
I gotta clap it up real quick, man. Congrats.
Appreciate it.
That's big, man. Congrats.
And yeah, I'm not just in New York because you got to diversify. New York is a great market for appreciation, but I have tenants. I have a tenant that hasn't paid me in 3 years, right? So I had to make sure that I'm not just gonna put myself in a box. So I got
Right.
like the states I mentioned before. Other states, it's love. I don't get as much uh income from the property. Like I mean net $300 to $500 per month, which is not nothing to sneeze at, by the way. But I don't have any headache.
Right.
Someone asked about the property management. Yeah, and that property, anything out of state, I paid them 10%. I don't know what's going on. I never even been inside the property, if I'm being honest with you. I don't know what it looks
Mm.
like inside. All they do is they send me, hey, this is the breakdown what happened every month. If there's an issue, they take it. They don't have the tenant doesn't have my number, only the property manager. They say, this is what you made, this is the fee we took out. Cool. I'm done. And that property every month is being paid down, building equity. And I'm not touching anything. So that's beautiful about out of state. In New York, the appreciation is crazy. That property I mentioned earlier that I bought with NACA, I paid $630 for it, and
Right.
it's worth over $1 million now.
Man.
So the other markets aren't going to appreciate the same. So it's give and take, and it's really what works for you and what your what your mindset is as far as what you're comfortable taking on. Do you want the appreciation? Can you deal with the headache and what comes with it, or do you want something a little bit more calm and just want to slowly build up your portfolio?
We have someone who just asked 2 questions. The first one is, do you use a property manager? Is it important for you to use one? And then secondly, how do you choose a property manager and do you interview them?
What was the first question?
I'm sorry, do you use a property manager and is it important for you to have one?
Yeah. If you're out of state, I definitely highly recommend using a property manager because you need some boots on the ground there. I use it. And as far as interviewing one, I go for referrals, right? So I want to know what other investors in the area, who they're using. If I hear the same name a couple times, then that's probably what I'm going to go with because they seem to have a good experience. And I ask those investors, how long have they been managing their properties? So that I can see like, all right, cool. And then I got to get a feel of like those investors, like, are they more laid back? Are they more hands-on? Because if you don't care about your property, I don't care what your property management does because none of y'all care, right? So if you let it go to the wayside, your property manager doesn't care either. Or do you want a property management company that's going to give you a breakdown every month, right? Or do you want one that's just not going to bother you? But I definitely interview them and I see what they're willing to do, what they're not willing to do,
Right.
their terms, how long is the contract, are there going to be any rate hikes, who the contractors that they use if something goes wrong, so that I know, are they licensed and insured, all of those things. But for out of state, because I'm not physically there, I'm not going to be flying out to Atlanta, I'm not going to be flying to South Carolina. I definitely use a property manager.
That makes sense. All right, let's circle back real quick to how you even got into this space, right? Because again, a lot of people, they want to get into real estate, but what is the first, again, let's speak on how you got into it and what would be the best decision for someone else who's watching right now and they want to get into it themselves.
As far as an investor,
yes,
I got into it because I had the same mindset that I think most people have, that I couldn't afford a property, that I needed 20% down. And I was on the verge of getting kicked out of my apartment at the time. So I'm looking for a new apartment. And I walked through this apartment. The apartment was beautiful. And the agent, I didn't know was the actual landlord. So we're chopping it up. And she looked at my pay stubs when I'm trying to submit the application for the apartment. She says, why don't you just buy a house? And I'm like, I can't afford a house. She's like, no, yeah, you can. Yeah, you can. And she broke it down to me and gave me step by step what I needed to do. And that's how I got started. Okay. After I rented that apartment, in 2 years, I had my first property. And then I just scaled up after that. So that's how I got started. And I didn't stop. Then I got my license to help other people. I really got my license to help the homies. Like, it was more so just my friends want to buy a multi-family property. All right, I'm licensed now. I can give you the real what's going to happen.
Yeah.
And then word of mouth spread, and it's just like, all right, this is a business now, and let's treat it such. And that's how I got started, really.
That's dope, bro. And that's the way it's supposed to be. Like, once one person get their foot in the door, you open up the door wide open for everybody else to jump into it. I love that. That's what I love about you, too. You're always thinking about giving back to others as well as pulling them up the ladder.
Yeah.
That's why you're blessed, bro.
You don't lose anything from giving information to anybody else. Or
Absolutely.
like, there's so much out there. Like, there's so much abundance out there that it's not going to take anything away from you by helping someone else. In fact, you may even grow further along if you help somebody else out. Like, you build that relationship with them and the network, because you don't know who else that person knows, who they'll put you on to because you help them, and it just grows from there. So I definitely recommend, like, if you have information, put it out there, help others. There'll be opportunity to make money on the back end, but build a relationship first.
1,000%. And then another thing as well. So like, again, we're on social media right now. How important is social media to not just your business, but for you growing as an individual?
Oh, it's so important. And I think the main thing people gotta get out their heads, post content. And if you are in a position, or you are, maybe have anxiety, or you're shy and you want to post content, there's so many different ways you could do it. Like, you could do voiceovers without showing your face. You could do written word on Instagram, like, send them tweets out and put that's a reel. Or if you like to show your face, get in front of that camera, because it's going to build your brand. And get it out your head as far as, like, if this content is good. Because some people are sitting on content in their photos album, not releasing it. It's just sitting there. You look at.
Are you talking to me? Is that what
I listen. I'm just saying, if it fits, it fits.
Are you talking to me? You doing
don't sit on the content, especially if, like, you gotta really think about it. Like, I think some of it is fear, and some of it's ego. Who are we to think that this content is so bad that the whole world is going to be pissed off that you put this content out? They're going to forget about tomorrow. Literally. They're scrolling so much that they see it, and they're going to be like, either, it helped me, I love it, I'm going to buy your product, I'm going to support you, or they're going to move on. They're not going to remember after that. 6 hours later, they're going to go watch P-Valley, they're going to check out House of Dragons, and that's it. So put the content out, and it's going to either work or it's not, but then you'll learn from it what to put out, what's working for your business, and what the people like, and you just grow from there.
Spitting. Good info. Quick question. Someone asked, so do you need a license to buy property?
Nah, you don't need a license. It's actually more expensive. Like, there's a lot of expenses that come with having a license, right? So, like, annual fees, monthly fees, dues for the brokerage. So if you know that you just want to buy property, you want to be an investor, you don't need a license. You need to just tap in with somebody that has a license. Actually, you don't even, if you're savvy enough, you don't even need a realtor, if I'm being honest. And I'm saying this to you as a realtor. But do your homework, because you can buy properties. Like, I do wholesaling sometimes, and you could deal directly with the seller.
Right.
Like, for the properties out of state, I get the list. I look up a list of people who may be in financial hardship, and I contact those sellers directly. No agent, no middleman. And I work with them directly, like, hey, can we work out a price?
How do you go about contact or even finding them?
Great. There's a couple websites. There's a website called listsource.com. Somebody put that in the chat if they want to. That's www.listsource.com. You can use that website to buy a list. Literally anything you can think of. Zip code, age. If you want to know if this owner owned this property for over 50 years, I want to target those people. If you want to buy a list of people who are going through bankruptcy, I want to target those people. Divorce, I want to target foreclosure. Anything you could think of. If they owned it for 6 months, I want to target those people. Because you gotta work it backwards, right? If they own the property for 40 years, chances are or if they have 100% equity in the property, you could target a list like that, and then say, all right, if they own it 100%, they may be able to do seller financing, no bank involved. I contact the seller directly and say, hey, are you interested in selling the property? Because of your age, instead of selling it and paying taxes, how about I pay you a monthly income? That way you can retire and we just pay you over a month. And maybe after 5 to 7 years, I give you a balloon payment, meaning I give you the final balance. But that's just you refinancing. Right. There's so many ways, right? Or if someone's going through bankruptcy or divorce, chances are they're going to need to sell that property. So before it hits the market, you contact them like, hey, I'm buying properties in the area. Are you interested in selling? You don't got to go into the details of how you got the list. I'm like, yeah, I'm interested in selling. What you working with? Because now, before they even speak to the agent, you contacted them. Like, yo, what can we work out?
Yeah,
and you don't need no realtor for that.
Yeah.
No realtor. Oh, someone asked Listo? Nah, it's List Source. List Source.
I'm gonna spell it. Spell it out. I'm gonna type it in.
www.listsource.com. You buy the list per the amount. So the bigger the list, the more money it's going to cost. There's other website I use called PropStream. That is, I believe it might be, I think it's either $97 a month or $297 a month.
That's a monthly fee.
Yeah, it's a monthly fee.
Is List Source a monthly fee as well or no?
No. You pay per list.
Okay.
PropStream, you pay a monthly fee, and they give you the same thing, just a little bit more of the back end, right? you may know how much money they have left on their mortgage. If you want to do skip tracing to see what their phone number, their email address is to contact them, it has that feature as well. It gives you pictures. It shows you if they have any tax liens, you know, if they have any judgments. That way you can formulate your game plan as far as who you're contacting and why.
Man, you're spitting, bro. You're giving us source. You're giving us source. I really, really appreciate that. And another thing about that, so I do want to go into the renovation side of it, because we clearly see, you know, following you from the day in the life, you do a lot of renovation. So how often are you at Home Depot, and how is the whole renovation process even, like, how is that, right? Because again, we see on social media, not just you, but from others, as if, like, you know, people make it seem so easy. You buy a house that's undervalued, you renovate it, put like 5K, 10K, maybe 20 into it. Next day you're selling it, you're making all this money. So what's the realistically of being a renovator?
I'm probably at Home Depot 5 days out the week. Not because I want to be. Working on fixing that. But the process is, especially if we're talking about New York, there's always something wrong with the property. I promise you that. Always. And with New York, with the ages of these properties, you're talking about 1910, 1940, 1960. There are things that are going to be behind the walls that you would just not see. And if you are the type that wants to do things properly, you're going to pay for it, right? So you got to budget for that. So once you start doing these renovations, whatever you plan for, get out your head, because there's going to be more. Like, there's going to be something that pops up that you didn't plan for, that you have to go back to Home Depot, you have to hire a new contractor for. The electrical isn't right. The plumbing isn't right. The floors have no support. The roof is caving in. So it's not quick and easy. And if you try to take the quick and easy and put a Band-Aid on it, you are jeopardizing someone else. Because if someone comes in there and you know that electrical wasn't right, or you know that floor is a little bit soft, and they hurt themselves, I mean, that's on you. That's just your conscience, right? You know what I'm saying? Like, giving somebody bad work, like the work is stepped on, you know? So as far as the process, it could be expensive if you don't budget it correctly. And it could be very time consuming if you don't know what you're doing, which is why it's good to get a mentor who's done it before. They could guide you through that process. But it could be extremely lucrative, because the properties that require renovations, nobody's looking at.
Right.
So it's interesting, because everyone is looking at the property that's fully renovated already. That's what they want. But guess what? You're not the only one. That's where all the competition comes in. They love the kitchen. They love the bathroom. The tiles look amazing. Oh, you got a 12-foot tub? Stand-up shower, Brent? Yeah. Everyone else is looking at that property. Meanwhile, the property that looks dingy with the carpet, it may have a little bad odor. No one wants to walk through there. It's a little dark because they ain't got the lights on. That's the property you should be looking at. Because the price it would take to get that property to look like the next one is a lot less than what they're going to tax you if they did it themselves. Let's give a real life example. Let's say that fully renovated property on the same street costs $500,000. But they're selling the one that is, you know, with the old carpet, the bad odor, for $350,000. Now, it's not going to cost them, most likely in most situations, $150,000 to get it to that $500,000 property. But they're going to charge you for the materials that they use. They're going to charge you for the time that they put into it. Now, a kitchen and bathroom, even if it costs you $20,000, $30,000, look at all that equity you had, right? You go from $350,000 to $380,000, and then the spread is $500,000. So that's how they make their money. So you got to really like say, all right, walk through that property. Is it really as bad as I think it is? Or do I just not know? Am I just not educated enough to what's a big deal?
Damn, that's some shit right there. So, I mean, obviously, you do need your education across the board. It doesn't matter which sector that you're dealing with. Education is key. Someone just asked, is there any kind of protection for buyers after they close if there are any major issues? That's a great question.
Generally speaking, no. So during the buying process, once you have an accepted offer and you're dealing with your attorney, right? You want to, in that contract with your attorney, whether you're using a program, you're doing this by yourself without a realtor, there should be an inspection clause for a certain amount of days, 7, 14, 21, whatever you and the seller negotiate. And during that time period, you get your inspectors out, multiple if you have, and you have them look at the property. Now, if something comes back and it's like the foundation is bad, this property won't stand up, you have the opportunity to back out of that deal. So you take those days to have everybody check the electrical, check the plumbing, check the foundation, to make you feel secure enough to move forward.
Smart.
That's your
Smart.
protection right there.
And that could be, as you say, it doesn't have to be like 14 days. It can be like 7 days or so forth or what.
Yeah, so it's negotiable. The first thing I
Okay.
recommend is that no one skip the inspection phase. Don't ever skip it. I don't care what realtor tells you it's a hot market, you can get this house, beat everybody else out, skip the inspection. No, don't do that. That's bad. That's bad advice. Always do your inspection. Now, everything's negotiable in real estate. You can tell somebody, hey, yo, that dining table, nah, leave that. I like that. Leave that, and I'll buy it. I want that. You can take everything else though. Just like with the inspection clause, right? I want 30 days. If you know the market is kind of slow in your area, they might accept that 30-day inspection clause. Now, if you know it's hot like New York, they're not going for it. But you know your area, everything's negotiable, not just the price. The main thing, people are so bent on what the price of the home is. It's more important to negotiate the terms of the deal than it is the price. The terms dictate everything. How long will we close? How long is my inspection? What can I get with the house? How quickly will you move out? Like all of these things, the terms are so super important over the price, because especially if you're like a seller financing deal, if you're just negotiating rates and all those things,
right.
That would impact you more than the price, the sticker price, right? So if the house is $800,000, but you can negotiate for the seller to leave you or give you $40,000 or leave $30,000 in escrow, that's better than just taking off, oh yeah, instead of 800 I paid 770 for it. Nah, because you gotta think about it this way. People will negotiate the price like because they want to get a deal. They feel like they need to get a deal. The house was listed for $850, but I got it for $800. You know what that difference is on your mortgage? It's probably not even, maybe 50 to 80 bucks per month, depending on on your rate, right?
Yeah.
Now, are you willing to lose that opportunity for $50 to $80 per month over the course of 30 years, especially if it's an investment property that you're going to rent out anyway?
Right.
You got to think about it like that way. The terms are way more important.
Now, speaking about terms, speaking about interest rates, speaking about property, now we can circle into Bank of America. So we're aware of Bank of America, where they came out and said what they gave it for quote unquote black. So what are your true thoughts on that decision from Bank of America?
I go both ways with it because I see a lot of like conspiracy theorists going on about it. Like it's gonna hurt the community. Why are they doing this now with interest rates higher? And the first thing you should do is check to see if it's in your market. I know it's in Charlotte, Dallas, I believe Miami. It's not in most markets. So if it's not in your market, move on. It don't apply to you. Now, if it is, you take it for what it is. Would you rather say you're not going to take advantage of that program with no down payment, no closing costs, because you feel that they have bad intentions? So you're going to continue renting because you want to stick it to them? They don't know who you are. And everyone else is going to take advantage of that program. Now, what I do know is that it is not truly targeted for people of color, black and brown people, right? It's black and brown communities. And guess what's going to happen? The people who aren't living in those communities or who don't look like us are going to take advantage of that program. Yeah, and then we're gonna look up 10 years from now like, yo, what happened? Why was the neighborhood changing? Because they took advantage. If you're in a space to want to buy a home and you know it will work for you, take advantage of the program. It doesn't have to be Bank of America. It could be NAFA. It could be FHA. It could be Chase Dreammaker. There's a ton of programs out there that you can use. Take whatever fits for you and keep it moving. Like, while you sitting there worried about what their intentions are, you need to get this house.
Someone else taking advantage of it. Perfect.
Someone else is going to take advantage of it. You need to get this house.
Perfect. Well said. Now, speaking about all of that, right? So what would be the cons of it though, right? Now, let's say if I have bad credit, right? I have zero down. I see this and I just want to jump in and I want to buy a house because, again, I see this as a deal and it looks as if it's attractive. Maybe it's something I want to jump into. So what do you say to someone like that? Because I'm pretty sure a majority of people, especially here from social media, is like, what you need to do right now is buy a crib before the prices go up.
Yeah, so it goes back to affordability, right? You don't just buy a house just to buy a house, just to say you own it and flex, right? Because you just bought bad debt. You got to make sure that, like, the program is out there and it's great, no down payment, no closing costs. But when you buy it, is it a deal? Will you make money on it, or are you going to lose your shirt in the process? So that's the main thing. You just don't spend the money or use the program just because. You buy a deal, so you take advantage of it, right? So if these programs are saying, here's a trick, right? You check out all these low and no down payment options. You put them on a list, and you see what they offer, the pros and cons. Like Chase Dreammaker, right? That's one example. They allow you to buy 1 to 4 units, but they have a higher interest rate. You compare that now to the Bank of America program, to the NACA program. And like, all right, cool. What do you want to do? You want to buy 4 units? If you buy this 4 units, right, is there any penalty for buying 4 units? Is there any prepayment penalty? Anything at all associated with using this program? Now, will the numbers make sense when I buy this 3 or 4 family? Because that's all that's about, right? So then you could use their program with no down payment and no closing costs and instantly start making money once you buy that property. You get it rented out. So you got a 4 family with no money out of pocket. Now, if you're using that for a 1 family house, it's a lot different because they'll approve you for the loan. It's up to you to make them payments.
Yeah, they definitely will. Now, even with that, so do you recommend that someone who's looking to take advantage of these programs, that they still go with a realtor by doing so?
Yeah, because especially like if you take NACA, for example, there are agents who have a ton of experience out there, but they can't close a NACA deal because they've never done it before and they don't know the yellow tape behind it and the process of going through a NACA deal. So each program has different requirements. You want to make sure that the realtor you're working with understands those requirements. Just like FHA, if you have to do an FHA 2 or 3K, that means you have to do a renovation loan. If that realtor has never done it before, it's going to be a headache for you and that realtor. So I definitely recommend seeking out someone who's familiar with the program that says, all right, Bank of America, with this no down payment, these are the hurdles you have to look out for that they're not telling you about. Yeah, like with NACA, they don't let you know that if you have window guards on the basement window or the first floor window, that they're not going to pass you when it's time for inspection because it's an egress, right? So the average agent who doesn't close NACA deals is not going to know that. Now you got an extra step in your process because they couldn't even see it coming versus someone who's worked with the program sees it and like, all right, we need to take care of that before we go to this next step.
Right. And that's very great. And I want to really touch on this one more time because we pretty much been saying it throughout this conversation. The importance of having someone who you're dealing with, expert in that field, have the experience in that field. What you don't want to do is you don't want to just jump in to work with anyone just because he or she said that, hey, I'm someone in this field. It's not going to work that way. Right? Because like you said, if someone who hasn't been dealing with NACA, they jump into it, they're like, hey, I don't know, what about this, what about that? They're going to mess you up. So very good you touched on that though, bro. And another thing as well. So we often, especially in our field of business, right? What wealth was as well. Discipline is important, especially consistency, right? So how do you go about, or let's even speak on that. What is your idea of the importance of discipline and why it's needed for you to be successful with what you're doing?
It's super important because you need the discipline and consistency to gain any amount of success. Right. So, and it comes with the repetition. If you don't stay diligent as far as your business and your process, you're going to be juggling everything in the air and then everything's just going to come crashing down. Right, so you got to stay focused as far as like, all right, and put systems in place that if you're running a business and you're saying you're helping people, you need to know, okay, anytime you see something, this is the next step. It's like they call it SOPs, standards operating procedures, right? So you want to make sure that like, all right, I got systems in place. When this happens, this is what I do. It also makes your life so much more easier. Like, and if you are having trouble with discipline, like one of my favorite books is The One Thing by Gary Keller.
It's my favorite book. It's funny.
Yeah, it's literally just you focus on one thing. And if your one thing is, I want to buy a house, no, get real specific. Where do you want to buy a house? What do you want it to look like, right? And then you write that down on the top of a piece of paper. I want to buy a house. And it costs this much money. And work backwards. All right, how am I going to get this much money? The monthly payment will be this. How will I get that monthly payment? Do I need to start a new business? How much do I make right now? And work all the way down to, I need to wake up at 6 a.m. on Tuesday to do this, to let me do that, to eventually let me buy that house that costs $1 million.
Absolutely.
Focus on one thing.
Damn, bro, you spitting. And I got another question as well. So, no, Max, a lot of questions. And hold on, you got to start to sleep now. What happened to the questions? It's not sleep, but quick question. Like, what is your idea of success? And the reason I'm asking is because everyone idea is different, and I feel like people they get caught up with success has to be you have to have a mansion with a 4-car garage. You got to have 5 sport cars. You got to have a pool in your crib, a basketball court in your crib, all these different things in your house to make you successful. So, what is your idea of success, and then why is it important for you to focus on your idea of success?
Um, I remember when after I left NYU, I moved to Europe for a bit, and I'm speaking to my cousin. She's, I made a statement roughly correlating her success to money. She corrected me and said, "That's not my definition of success."
Hmm.
And I understood what she meant now, because if you have success tied to a dollar amount, you'll never be successful. There's always going to be more money. They print money. So I get $1 million, I get 10 million, I get 10 million, and I want 100 million. My definition of success is this year I put my mom in one of my apartments. She doesn't have to pay rent. She don't have no expenses. That's success to me. Like, you're taking care of people, or you're providing value. It's not tied to any dollar amount. It's more tied to like comfortability. Like, because what are you gonna do with the money? You're gonna buy something. Like, you don't just get money to just sit there and look at it in your bank account. Money's a tool, right?
Of course.
Like, you're gonna buy something that you want. You're gonna take a trip. You're gonna buy a car.
Of course.
You're gonna enjoy it. So remove the money, and what do you want to do? What's gonna make you happy? That's success. Is it spending more time with your family? Is it walking your kid to school? Is it just reading a book outside? Like, that'll be your success. Having that time to do whatever you want to do, that's success.
No, absolutely. I agree with that. I agree with that 100%. And it's funny enough because a lot of people ask me, how come I don't do all these different things, all these different stuff? And the same exact thing, like my idea of success is not that, right? It's not tied to materialistic things. It's tied to, more likely, I have time freedom. And that's something that I feel like you can't put a price on that. But besides that, though, if someone asks, how do you go about networking? It's actually a great question because we met from networking.
Yeah, we did.
It's a great question you asked us. So how do you go about networking? I'll actually throw my 2 cents in there as well.
Yeah, there's plenty of ways. The first is putting yourself out there. So, Hanson mentioned making content. Like, you may think that's not networking, but that's networking. Social media is networking. You putting out there, someone commenting, and then that builds a conversation, and you go from there, and that's free. Then there's free networking events that me and H met at, right? So, like,
right.
I show up, and you don't always have to think about it as direct correlation of what you're going to get out of it, because you don't know. Who would have known that? That was, I don't even know how many years ago that was, right?
Yeah.
And it's a room full of people discussing all different types of things, and that builds relationships years down the line. So you go on Eventbrite, there's free networking events, right? In your field, if you do hair, and you want to figure out, like, I need to get better at my closures. My lead outs ain't hitting the way it's supposed to be.
Right.
Look at those events. Who got the best bundles? Like, go to those events, and you get the information that you need. And a lot of them are free. So social media is one. Leave comments on people's pages. Ask them, like, yo, can we chop it up? Do you have a calendar where I can book a call with you? Or go in real life. That social equity, that real life thing, real life equity means so much. Like, that's how you build relationships and you network with people.
Absolutely. I agree on that. And not even that as well. I feel that it's more about, it's not about who knows you. Well, it's not about who you know, it's about who knows you. And a lot of people won't know you if you're not out there, going to these different events. As we said, so even on Sunday, right, get to the back brunch. That right there was amazing. I'm pretty sure you got more connections from there as well. And again, you have to be in the room to be able to get those connections. So yeah, I agree with that. You definitely got to put yourself out there and don't be shy about that. And that's like the biggest issue that I don't like about social media is that it allows us to get so caught up with speaking on social media that when we're in person, we actually become more awkward and we don't actually speak up. Right. So now you missed out on opportunities in person because you as an individual who spoke up and, got the idea, or not the idea, but got what you want to act as an individual because you just decided to be quiet.
Right. And then some of these events cost $20-$30, right?
Yeah, so it's really not a lot.
You spend that on DoorDash and Uber Eats. That's it.
Just their fees, not even on the food.
Just the fees alone. So for you to spend that and get in the room, and here's the funny thing about that, because some people won't spend that money. Some of these events have food. You spend that $20,
yeah.
you're going to get food, open bar, and then you get to network with people who are in the position that you want to be in as well.
Right.
So, spend that money and take the time out to meet people in real life, and it'll take you way further than anything else would.
Absolutely. We got another question. What's your opinion on partnership on properties, friends, and family?
I'm not fond of it. What I would say
Me either.
is your first property, your first asset, get that alone. Especially if it's your first house, because there's no reason to partner up. There's so many programs out there for first-time home buyers. Why would you tie it with someone else? Especially like you mentioned Bank of America. If there's no down payment, no closing costs, no fees, it's a low barrier to entry. Why have somebody else on your deed? What value are they providing to you? Nah, cool. You get your own, they get their own. Now, if you and that friend and family really want to work together, make sure the operating agreement is tight. You get that LLC, you get that corporation, you bring it to an attorney, you're responsible for this, I'm responsible for that, this is the money that we're putting in. Because when that asset comes and it appreciates or it's making money, things will change. Right. So you want to make sure everything is airtight. Because if y'all both buy a property and one person is managing the tenants, but one person is networking and you don't see the value in their networking, they don't see the value in managing tenants, it starts problems. Or splits don't come in properly because the money's low. How do you determine who gets what? Or if one person wants to sell and the other doesn't because they believe in the neighborhood, where are you at now? You got to make sure y'all both on the same page. And in order to do that, or to even if y'all don't get on the same page, is to have a standard contract with an operating agreement that says what's going to happen. There's a lockup period of 5 to 10 years. You can't sell no matter what. That's what you need. So otherwise, I would say don't do it.
Agree. Bro, you spitting. You spitting, bro. I got another question as well. Personal question. So, personal question. So, what is something that someone can do right now to put themselves in a better financial situation?
To put themselves in a better financial situation, what they could do right now, this instant, is pay off anything that's non-recurring expenses. So if you have a personal loan you took out, you borrowed money from your retirement account, you have a car note, expenses where once you pay it off, that's it. 100%. That's the best way. That's what you could do right now. Because 100%. Not only you eliminate that expense, you're giving yourself a pay raise immediately.
Right.
And I'm not listen, the financial experts are gonna be like, oh, stop drinking Starbucks. You stop drinking Starbucks, it's not gonna get you $1 million.
That shit ain't doing nothing.
It ain't doing nothing for you. Like, let's keep it 100. It's not doing nothing for you. But that car note that you got 2 years left on, right, what you gotta do is get serious and be like, all right, cool. I'm gonna put an extra $20 on it, right? I'm gonna pay it off. And I'm not going to get a new car after that. If your car note is $500, you just pay yourself $500 every month without adding any extra time to your day.
Absolutely.
That's what you could do right now. Because if you would say, I know some people like, yo, start a business or, or I ain't gonna say that. They're gonna say start a business or do something else, right? Like to make some more money. That's gonna take time out your day. And there's gonna be upfront costs that comes with that.
Oh yeah.
So if you wanted to minimize your costs, you wanted to spend no extra time, take care of those non-recurring expenses first. Then what you could do is like, yo, get serious about them credit cards. They charge you $200 in interest. You're not even looking at it because it's so high. Nah, do that. Get rid of that credit card. And if it has a recurring expense on that credit card, take it off, put it on another credit card, right? This is to hold you over. Now, there's no charges reoccurring on that credit card. Pay that one off, put it to the side. You don't got to cancel it because you got the age. Put it to the side. Now, work on the next one. It's a snowball effect. Now, you just kill your non-recurring expenses and you kill some credit cards. You then take that money and you invest in yourself or you invest in mentorship or both. And that's going to take you to where you need to go. You can do that right now.
But bro, I want to get these new Gucci sneakers that just came out, bro. Like, come on, man. I got to get these Gucci sneakers. I got to get the drip. What about that, man? What am I doing?
You could get that, but that pair of Gucci sneakers is adding a 6 month to a year or maybe more delay in your success.
About 2 years, maybe like 2 years.
Maybe 2 years. Maybe
right.
2. I was trying to be nice.
Nah, we're going to be real.
See, a delay in your success, right?
Right.
Because you're going to charge that $800 to $1,500 pair of sneakers. They're going to charge you interest on that 17 to 25%. You'll be paying an extra $100 per month for that one pair of sneakers. Mm-hmm. You'll be trying to pay that down. Your salary hasn't increased that much in the years. You ain't getting no pay raise. Nah. If anyone would just literally take a year and say, all right, yo, I'm gonna stick to it for this year. Like, all
I
right,
agree.
yo, summer's over. We inside. It's winter anyway. No
Mhm.
brunches. Like I'm just inside. It's just about focus. And you focus for 6 months to a year, I promise you'll be in a different position.
Absolutely.
Guarantee it.
Absolutely.
Then after that, you run it up. Get the Gucci, get the Louis, get the Kith. Get all of that. Get the car, because then you'll be good.
Absolutely. No, I 100% agree with that. And I feel like people get caught up with instant gratification that they miss out on the true pieces of wealth, right? So for starters, like lowering your expenses, that is a huge piece of wealth. And by doing that alone, as he said, that's going to help you put you in a different bracket, not even this bracket, but also give you more income coming to yourself. So without doing that, again, if you just like buying these shoes, buying this and that, you're not actually putting anything towards yourself, you're not going to get that wealth, man. You're going to put yourself in a more debt cycle. And then what you're going to be doing is becoming a hamster on the hamster wheel, just running around over and over thinking you're moving forward, but you're really not. I agree with that, though.
Yeah, and like I'll add this to it. I delayed the time I mentioned I bought that house. When I rented an apartment, it took me 2 years, and I had a 3-family property. So in that year and a half to 2 years, I didn't buy anything. I didn't really take any trips, none of that. I then had the property that was netting me $500 to $600 per month. Every month I was buying a new pair of sneakers. Every month. And if I didn't buy sneakers, I was taking a trip. Because I had an extra $500 per month that I did not account for. Right? So now I took those 2 years off to get the property, and I could buy whatever I want every month off that one property. Or I could say, you know what? $500 a month, that's $6,000 a year. Let me go level up and get another property. And then you can buy whatever you want. But you gotta think about it, $500 a month, that's some people's car note.
Right.
But you took that 2 years off, go get the car you want and put it on the property. That property pays for this car note. That property pays for my traveling.
There you go.
That property pays for my insurance. And that's how you do it. Now nothing you spend, no money you earn, you have to spend. You have a property to handle each expense you want.
And for those who's keeping up, he's at 11 properties right now. That's fucking impressive, bro. Seriously, I gotta really clap it up again once more for that. Hold on, we got Asher said, I just knocked out my car note to eliminate that payment in January. Congratulations to that one. Congratulations.
Shout out to you. Now listen, you just knocked that car note out. You got an extra surplus of money. When you get your bank statement next month, right? That whatever your car note was, $800, it's sitting there. The goal for you now is to take that money and pay off something else. Knock out something else that you had still going on where it's going to be a non-recurring expense. And it might be a personal loan or maybe some student loans, depending on how high it is. Now you go from $800 to $1,500 because you knocked out something else. Now you got $1,500 extra every month. What you going to do with it? Start that business, open that daycare, buy equipment for your YouTube channel, buy the property. Now you got money to play around with options. Don't go crazy. Don't blow the bag. But you got flexibility now.
Right.
So now that you pay that car note off, you could really run it up.
Right. And then as you said too, like circling back to everything else, like paying off those things, again, it gives you that surplus. And what about it? Right, you're right though. What it is you have this money, but now what you gonna do with it? All right, because a lot of people, we just spoke about this. Some people put it towards an investment. Some people put it towards a liability. All right, so it boils down to what you put your money towards. We got another question. Someone said, how important is mentorship to you?
Yo,
you can go first, but I have to ask them.
Yo, there is no dollar amount that you could put on mentorship. Like, I get it, where some people don't want to spend the money to get a mentor or to book a session, but once you get information, they can't take it away from you.
100%.
So 100%. If you think about this live right now, and I'm giving up all this game, right? Imagine a one-on-one call, 100%. Right? And then I say, yo, you want to go here in real estate? Do this. This is your prime situation. Do this. Let's say, I'm throwing numbers out there. Let's say you spent $500 for that call. You don't lose the information I gave you.
100%.
You still got it. And then you take it. So if I charge you $500 for that call, and then you go make millions within the next 2 years, I think it's an easy decision.
Oh yeah.
Right? So like it means everything, because there's financial mentorship, there's like just emotional mentorship. There's so much guidance that you could get to help you move forward. At the get the bag brunch, shout out to your wife.
Shade, amazing.
Yeah, shout out to your wife Sade. Like, yo, imagine a mentorship of managing your time. There's some notes I took, and I'm like, all right, I'm gonna put that into play right now. But imagine if you hired her as a coach, right? And you save more time now. Time is literally equivalent to money. So there's, and whatever that person teaches you in that moment, once again, they can't take it back. You have it. You just have to use it now. So mentorship means everything to me. I pay for mentorship.
I agree. Yeah, same thing with me as well. Like I don't care what the cost is. If you're someone for value, one thing about it is that let's circle back with this. You gotta be a person of value, right? Like every mentor is not the mentor that's right for you, right? You first obviously want to do the diligence, see if he or she they can actually give you the value that you actually need, right? Look at the receipts, look at the testimonials and all that, right? And then once you have that set, again, pay for that. Like as you said, like it doesn't matter what the price is, you're gonna get that back. And once you get that back, now you're able to utilize that. So 100% agree with that. And I feel like a lot of people they get more in a scarcity mindset of not wanting to pay for a mentor because they feel as if like, oh, I can go to Google or I can go to YouTube do it myself. And there's nothing wrong with YouTube University. However, the biggest thing about it is that YouTube, Google, it's not going to be hands-on with you like a mentor will, right? A mentor is going to guide you, say, hey, as you just said too, like, I've been down this road before, right? I know when the pothole is coming. I know when that bump in the road is coming. I know when you have to dodge the traffic, or you may not want to make a left right here. You may want to keep going because you make a left right there, you're going to get into more traffic. If you keep going straight, traffic is going to clear up. You're going to keep zooming down the block. So I 100% agree with that, bro. I'm really glad you said that too.
Yeah, yeah. And if if the mentorship that you want, is a little bit on the expensive side, create a budget for it, right?
Right.
If you have to put $20 away per week, per month, just so that you could like get that call that would change your life, you should do it. And because I'm not a fan of like really getting more debt to get more debt. So
Agreed.
like whatever surplus of cash you have that you could put aside to eventually get mentorship, I suggest that's what you do. And then you book the call or you go to that event and you learn what you got to learn. You really soak as much value as you can out of it. And you take that information and you go on. You got like, imagine you take a mentorship course or a class or a call and they teach you everything you need to know about options. And then you run for play on options and you make a couple thousand per month now. Then you've been doing that for a couple years and you're like, I'm gonna write an ebook on this. I'm gonna do a course on this now. I'm gonna do speaking engagements on this. All from that one mentorship course.
Absolutely.
And now you got sources of income coming in and you don't even realize it was from that one call.
Right.
That's
absolutely. It. Yeah. That's funny because that's actually what happened to me.
Yeah.
Yeah, but you said it that way. But one question that I love asking my guests is pretty much like the main question. Now, if you can go back in time, what's the one piece of advice you give your 18-year-old self?
If I could go back, the one piece of advice would be just do it. Just get started. Literally just get started, go out there and make the mistakes right now. Get it over with. Because you're going to make mistakes regardless.
Right.
But imagine you're 18, you make the mistake, you could bounce back so much quicker and you can learn so much faster and you get out your head. So like, don't let those ideas that you have, don't push them to the side. You want to start that YouTube channel, start it. You want to make that music, you want to be a chef, you want to, like I said, you want to do hair, you want like start it right now, like literally right now. Matter of fact, I want to here's some action items, right? Regardless of what age you are. After this call, go to NACA.com and sign for a workshop. It takes 10 minutes. It takes 10 minutes. P-Valley season is done. Power's not on. House of Dragons not on. It's Tuesday, so there's nothing crazy going on right now. Take the 10 minutes and sign up right now. Sign up. That's one actionable item you could do right now. So, and the point is, don't wait. Don't wait. Just do it. And it doesn't cost you anything to sign for a workshop. So if I could tell my 18-year-old self, it's just to get started. Like, get out your own head. Whatever you think people are thinking about you, whatever your fears are, it doesn't exist. It's not real. You start now. If you're worried about, what if they say I can't afford the house? All right, they told you can't afford the house. Now what's your next step? Because it's not a no. It's a no for right now. I can do something else. What if they say my credit's not right? You don't know until they tell you. Start right now. That's what I would tell myself. Because if I started back when I was 18, oh man, I don't know where I would be right now.
Man, who you telling, bro? Especially like, I mean, we all say that too. Like, if I know then what I knew now, I'd be in a whole different location. And I feel like that's really what it boils down to. Like, you gotta know, not even just knowing, but you gotta apply the info. And I feel like we get so scared about the future that a lot of times we let it dictate what we do in the present in a bad way, not even a good way. It's like, oh, what if I just like, what if I fail? Like, you don't really know if you're gonna fail until you really try it. Or what if it doesn't work? Same thing. What if it doesn't work? You don't know. Like, why put those thoughts in your head? Right? Like, you got all these different things holding you back. Why would you allow your mentor to hold you back? It doesn't make any sense.
I always ask people, like, you know, what do you have to lose? Like, I really think about it. When I was buying that first property, I couldn't control the heat in my house, right? Like, the landlord controlled it. And I remember being so cold, like, and I'm still not doing the work to go buy a property. And I'm like, what do I have to lose? Like, all right, cool. People tell me in the barbershop, oh, you're going to have bad tenants. People not going to pay you on time, or property's a lot of work. And I'm like, yeah, you're right. I'm not going to do it. Oh, I'm just going to do the same thing like that I'm doing now. Like, imagine, that's a good problem to have.
Right.
You're talking about good problems. Like, I'm going to have somebody pay me. Like, that's the worst that could happen. Imagine I do all those things and I fail. I'm back to where I started. Like, if I'm thinking like, okay, yo, all these things could go bad if I buy a property. If I buy the property, worst case scenario, and I lose that property, all right, I'm back to where I was at before. I'm familiar with this area. The only difference is now I know the information on what to do and what not to do. So it's like, get started.
Oof. God damn, it's been an hour already. I didn't realize that. I really appreciate your time, bro. I'm not sure if I know you say you tight. Can we keep going?
Yeah, you're good. You're good.
Oh, we good. Oh, there we go.
You're good.
You
good, H.
So hold on. So now, for those who just been tapping in as of late, this right here has been an amazing conversation. But what I say, you guys want to definitely go and watch this whole thing over. He's literally given step by step the game plan, and there's actually a lot of stuff that I didn't even know when it comes to these programs that you're able to do. So really appreciate you sharing that, and for free at that. So just imagine the value that you're gonna get just by working one-on-one with them. Just imagine that, guys. Like, the value that you get in here, this is all for free, right? There's a free interview, free podcast, whatever you guys want to call it, free. And he didn't have to do that, but he allows himself to do that. And I really enjoy you for even that as well, because what bothers me is that a lot of people, what they would do, especially now, what they will do is they'll go to like these different events and stuff, and then like they'll give information that you could just Google, right? Well, information that is like, I can just watch your Instagram and you're saying the same shit. That irritates me, because it's like, yo, bro, like, I'm spending my time right now, and time is the only commodity that you can't really get, well, you can't get back, period. So it's like, I want to hear something that's real actionable. And what he just said as well, like, it's Tuesday. Y'all can get off this call when it's done, go and sign up for these programs. Like, y'all can do that. And as you said as well, it's free. So I really appreciate you going in there. Hold on, someone said, how important is your circle of friends? Oh, great question. I got to get some myself.
The circle is super important, because they always say, like, you're the product of the people you hang out with, but you really realize it when you could take a step back and look at it. So depending on what I want to do, that's my circle. If I want to go to the club, I want to party, I know who to hit up, I know who's gonna be lit. But if I want to make some money, I want to get down, I want to focus, I know who to hang out with. So my circle, they really talk about business a lot. They talk, and like, it's not even where it's like, yo, this is the plan. It's just natural conversation. So because I'm around that, I'm constantly leveling up. It forces you to level up.
Right.
If your man's just like, yo, I got an extra $2K, you want to start a business on Turo? Like, all right, cool. Like that's your circle. That's what they're talking about. But if they're talking about, the latest show, or like, House of Cards, what's popping on TV, and that's what you're going to be focused on. That's what you're going to talk about. So manage what's coming into your circle. And your circle doesn't have to be your physical friends in the world. It can literally be what you consume on the internet as well. Right. When you click on that explore page, who you're following, like, that's in your circle. You may not have direct access to all of them, but the information that you're feeding, that's consuming what you're going to do next. Because if all you're looking at is trading options, or how to make music, the best beat, or how to, get ready with me video in the morning, like, that's what you're going to be thinking about. That's what you're going to be focused on how to do. So your circle is super important. Have at least 2 to 3 people where like, they're going to make you accountable in what your goals are. All they have to do is be able to listen and care about you. If they have those 2 things, then they'll let you know, like, yo, you off your game, like, just do this. They don't have to know what you're trying to do. Like, they don't have to know about real estate or options, They just have to be able to listen and make you accountable. Because then when you're falling off, they be like, hey, yo, were you supposed to do that? Yo, aren't you going to do it? When you going to do it? Keep your circle tight.
100%. So I got another question, but we got another one. I see you have books behind you. Any books that you recommend in general?
The books I have behind me right now is The Psychology of Money, 50 Cent.
That's funny because that's actually, I'll let you finish. I might talk about that one.
I got The Psychology of Money outlined by Malcolm Gladwell, Seth Godin, This is Marketing, The 50th Law, 50 Cent, Robert Greene, and Barack Obama, Promised Land. So those books change throughout the month depending. Like those are what I'm like focused on right now. I said earlier, my favorite book is The One Thing by Gary Keller. I think that book is amazing. Like literally, it's straightforward and it could get you. That book is what got me my first property. So like that'll be my number one recommendation. I just sat down, followed the instructions. Cool. If you are trying to get better at marketing, social media, I recommend books like Storytelling. Seth Godin is like the GOAT. Social media and marketing is all about telling the story. Do people relate to you? Like you don't have to try to flex and have the Lambo in the background or like the Ty Lopez, like but
in my garage.
Yeah.
That's my guy, man. Like it's funny enough because that's my guy. I love Ty. A lot of people don't like him, but he's definitely dope.
He's dope. So it's like, do people relate to you? Because you'll be surprised what you get engagement from. Like everyone here has something that they can post online, but they're distracted by what everyone else is posting, making them think that it's not good enough. Like I get so much engagement. He called it my daughter, my dog, by posting my dog, and that leads to other business. Literally, it has nothing to do with real estate, but they're in tune. And if you connect with someone else on sports, on hair, on food, right, whatever else you got going on, they be like, I like this person because they do what I do. They look like me. And it's not, if you're just posting business, people get bored. They want to know who you are.
That's true.
So I read books on storytelling. I read a lot of business and self-development books. And yeah, those are my favorite type of books.
April, I need your list of books, please, and thank you.
I got you. Another book, I like Elaine Wentworth. I forgot the name of the title of the book, but her first book, amazing book. And it's just books that put you in the right mindset. Because you don't want to get overloaded with self-development and you don't take any action, right? But it's just books to show you that, someone was where you are right now. Absolutely. And they found a way to get there. Like that's all the motivation you need. Like I grew up in Queens, so I look at reference points, and I'm looking at 50 Cent, right? And you gotta think about like take it all away. Someone made it out. Anytime you're comparing a situation, you may think you had worse. I promise you, somebody had it worse. So you're thinking, oh, my credit is not right, or they made it because they had their parents' money, or they made it because their credit was A1. Or they made it because they lived in a better neighborhood. But every situation, every person has some type of privilege or some type of advantage that they could use to get to the next level. But there is a way out. So if you could see someone, and there's plenty of examples, that made it out of your neighborhood that look like you can do it too. And that's what the books let you do. They give you information.
Of course. You're absolutely right about that. And that's one thing that I love about the youth as well. And, why I showcase that because even myself, I came from the hood, and the fact that I was able to get out, then I'm showing everyone the same as I think you can do it. It doesn't have to be trading, but you just put yourself in a predicament, in a situation that allows you to elevate and get out of your situation. You definitely can do so. Ash has asked, what are your top 2 real estate gurus? Good question.
My favorite would be, I'm gonna give you 3 because I'm
put you on blast right now too. So just let you know, because once this go up, it's gonna go viral. So pay attention to what you say.
I'm a big. He's not really a real estate guru. He's just a huge developer, Don Peebles. He's a billionaire.
Like that.
Putting the goat out there. Don Peebles is definitely one of my favorites, if not my all-time favorite. He's not a guru. He's just dope. Just Google Don Peebles and you'll see. He's trying to build the affirmation tower in New York City. It'll be the tallest building in the Western Hemisphere. They don't get bigger than that, and he's black, so It's lit.
Right.
As far as gurus like social media, Aisha Seldon, I think she's super dope. It's
She's dope.
AYESHASELDEN. Aisha Seldon. She keeps it so real. She's from Philly, and she gives it to you straight as far as how to get
Facts.
this real estate done. No fluff. She talks like she's not trying to cater to a certain demographic. She's telling you like, this is what I did. This is the real. This is how you can be successful. I guess second, I'll say my homie MG the mortgage guy. I think I was gonna call him yesterday.
Yeah, she's dope.
Yeah, MG's dope. MG, and he doesn't talk about his investing business as much like on social media. But if you get the opportunity to speak to him one-on-one, then you'll know he is not shy when it comes to giving you the gems, the real gems.
Yeah. Hold on. Funny enough, I spoke to MG. This was last year, and we had a conversation, and I asked him a question about finances, right? So, well, I'll share it. So, I had a question about finances, like, what do you do when you're pretty much down to your zero, right? Let's say if 150 is your zero number, what do you do? So it's something that really stuck with me because he said if 150 is my zero, I don't even get to 200. So it made me stuck. Like, God damn, like I'm operating off of the fact that, like, let's say 150 is my zero number. He's operating the fact that, like, 150 is my zero number. I'm not even getting anywhere close to 200. That just how to show you how powerful it is, especially when you got to go into defense mode and then time you go into offense. So just want to throw that out there. It was a very, very dope gem that he gave me for free at that too. So yeah, you keep going. Sorry I cut you off, bro.
The amount of free gems he's giving, I couldn't even pay for it. I couldn't. There's no way.
Yeah, facts.
And he's not stingy with the platforms he uses to make money, like the back end stuff that's going on, the investments that he's doing. So those would be my top two. Like they drop gems.
How do you stay motivated when people don't believe in you? Good question as well.
I'm not distracted by what anybody else go on, and it goes back to what H said about discipline. So it's funny because I posted a reel today about vision and seeing the vision. It's like it's your dream. It's nobody else's dream. So why would they believe in your dream? They didn't experience the dream the way you experienced it. They don't see the vision the way you see it. So they're not going to be as motivated as you are to fulfill your dream. So I just remember the one thing that I want to do, like my one star that I'm trying to get to every day. And it doesn't mean you have to jump over the roof like in day one. It just means you have to do one thing to get closer to it. Because getting closer to that means you're getting closer to freedom. And it's amazing. Like you just have to think about once you get this thing that you're trying to get, once you accomplish it, you're in a much better position than you were when you started. And that way you could get new dreams. You don't gotta stay focused on the old dream. You could get, new motivations, your world is so much bigger because you realize you were thinking small. Because once you get that, you're gonna be like, all right, cool. What can I focus on now?
God damn. No, I'm pretty sure there's not every at least 2 minutes a crazy gem has been dropped. So man, I do see we ran like an hour and a half. I didn't know live can go that long. It's actually pretty dope.
I didn't know that either.
Forget what anyone thinks or said. Just put in the fucking work. That is right. Well, he didn't say fucking work. I said fucking work, but that's exactly what you gotta do.
Shout out to the homie G. Yeah, shout out to the homie. Yeah.
You gotta put the work in. Yeah, a lot of people they run from the work and they look for the shortcut. And reality, the only actual shortcut is just doing the work. So you really can't run from that. You can't run from your own experiences that you have to yourself got to create and got to give out. But real quick, let's actually circle back again. We do have a lot of people jumping in. This is my longest live ever so far. So that's
must be a good thing.
No, it's been great, man. Should have been phenomenal. But let's really go back into the beginning what we spoke about before. What are some actionable steps that someone can take to get into real estate? And then I got a two-part question. First part, and then second part, what are some actual steps that people can take to get themselves in a better predicament to get into real estate?
Okay. If we are going to say to get in real estate, like I mentioned before, you want to analyze where you want to go, right? What's the end goal, and what does that look like? And if you're saying you want to be here's the thing, you don't need a ton of money to get started in real estate. So we touched on wholesale in the beginning of this conversation. Right. If you know you have a small budget, but you want to get in real estate, start out with wholesaling. You don't got to do fix and flips right away. Level your way up, right? Can you afford to buy a list from the website I gave earlier? Can you afford that? All right, cool. Wholesaling is
And hold on,
essentially
What website is that you're talking about? What website did you give earlier?
listsource.com. So www.listsource.com.
And what does that list do?
So that list allows you to buy what it says, list. And you can buy a list on anything. So all of this is public information. So if we're talking about real estate specifically, everything is documented. So if you wanted to buy a list of people in the zip code of 11422 who had a bankruptcy in the last 30 days, you can buy that list.
Right.
And if they had a bankruptcy, chances are, but they own property, they may need to sell that property, right? And they may want to sell before that bankruptcy is finalized. Or if they're going through foreclosure, you could buy that list. Or if they're above the age of 80, you could buy that list. I bought a list for someone who's above the age of 80 in a certain zip code. And I reached out and I said, hey, I'm looking to buy properties in this area. And the number came to the son, the owner, because the owner passed. And the son now had it. Now, I called the son, I'm like, hey, I'll buy that property from you. He's like, I just gave it to the bank yesterday. So, like, that's the power of lists. Like, if I was a day early, I could have bought that property for about $10,000. But you could buy a list and you could just wholesale. So imagine you don't have that large capital to, do fix and flips, buy a property outright. You could contact the seller and say, hey, I'm interested in buying a property. And you learn how to analyze the deal. I have plenty of videos on how to analyze the deal on my YouTube channel. You analyze the deal, like, okay, I pay you this amount for this property. Let's say it's $10,000 to make numbers. So let's do real numbers. Let's say the property is worth $120,000, but you could get it for $60,000. You say, all right, I'll pay you $60,000 for that property. You then come to someone like me, like Jaleel, or any other investor, and you say, hey, Jaleel, I'll sell you this property for $75,000. I know it's worth $120,000, $150,000. All right, cool, I'll take it. I don't care that you made $15,000 because I'm going to make money too. Now, you just made $15,000 just off your marketing skills, just off knowing how to analyze a property. So you didn't need much money to get started. You then keep saving that $15K, that $10K. Then you build up and you buy your own property. Then you don't got to wholesale to another investor. You keep that property for yourself.
Absolutely.
Then you sell that property. That's how you get started with little to no money.
Absolutely. And we got Michelle Reed says, H, I need to speak to him for real. Yes. Funny enough, because we actually met on Saturday. We're not met, but we didn't meet, but we linked up on Saturday, and I was interested in you, and I said, you know what, I wanted y'all to connect you guys together. So ironically enough that she's on the phone. But yeah, Michelle, I'm definitely gonna connect you guys in because that definitely gonna make things happen. But bro, we pushing an hour and 34 minutes. Goddamn, did not know it was gonna be that long. This shit is amazing.
Yeah, man.
But, we also, I gotta get some food in my system. I was a little hungry before I got on here. But besides that, before we actually get off here, two things. First, drop your handles. How can people reach out to you? How can they contact you? How can they work with you? How can you become a mentor? That's the first thing. And then secondly, if you guys got any questions, drop your last minute questions in here. I know that Instagram is a little delayed when it comes to, the real time of us talking and you guys actually getting it. So yeah, so for starters, drop your info in there. How can people contact and reach out to you?
Okay, before I drop my info, I just want to read the room a little bit, and I want to say, like, if you are looking to buy a house or anything like that, or whether that's for investment, your personal, drop a fire emoji in the chat, right? I just want to get a sense of who's in the room and what's going on and what your goals are, because I want to give you some real value, some actionable items that you can do right now, especially if you join late. As far as my handles, it's Jaleel Muss, that's JALEELMUSS. And everything is there on my link in the bio. So you can figure out how to contact me. You can figure out how to book a session. You can watch videos. Everything's in the link in the bio when you go to my page. So, there's a lot of fire emojis going on, right?
We got some fire emojis coming in.
Yeah, All right, there's some fire emojis. So for y'all that are interested in purchasing a home, if you weren't here earlier, I mentioned NAFTA, right? And once again, I'm not sponsored by them. So, I don't make any money off mentioning their name. You go to their website after this. That's it. Just tap in. It's 8:30. Y'all gonna be up to 11 anyway, right? So take 10 minutes out. go to NACA.com and sign up for a workshop. It's free. They're not gonna run your credit. It's literally just you. Y'all listen. Y'all subscribe to a lot of junk email, right? Just sign up for that. Give me email. Put your name in. Pick a Saturday that you want to attend the workshop. Winter's coming anyway. You ain't going outside. Join that workshop, and then you could start your first step to getting that property. Also, there's a few first-time homebuyer programs depending on what you want to do. There is NACA is one. There is Bank of America Affordable Loan Solution. That's not the one that just came out. That's 3%, and that's nationwide. There's Chase Dreammaker. Google all of these three and see which one best fits you. FHA is not a first-time homebuyers program, but a lot of first-time homebuyers do use it. It's 3.5% down. I want you to just get a piece of paper and just old school, put a line through each one and say, all right, this is what they offer. This is what I don't like. This is what I do like. It's like they're all vehicles, right? So let's say, there's a G-Wagon, there's a Wrangler, there's a Benz 550, and maybe there's a Mini Cooper or a smart car, there's a Tesla. All cars are dope, but they're used for different things, right? So the Wrangler could go off-road, and maybe that's the direction you need to go. But it may be a little bit bumpy ride, right? But let's say you got the money, you want a smoother ride. All right, cool, you take the G-Wagon. And that's how these programs work. You figure out what your budget is, what works for you, and be like, all right, you know what, right now, I can only take the smart car. It's gonna be a rough ride. It might take me a minute, but I'm gonna get there with the least amount of money. And you figure out which program works for you based on your situation.
Action. I like that. Quick question. I know it's a little delayed. We got any questions? Yeah, he's dropping gems. He's dropping gems. Y'all definitely got to. I already know for a fact that the way this thing processed, it may not be uploaded tonight. I may have to upload it tomorrow at 12 p.m. Eastern Standard Time on Wednesday. But today's Wednesday. No, it's Wednesday. Yeah. We're not talking about it's Tuesday.
Yeah, today's Tuesday. Straight Talk Tuesdays. Straight Talk Tuesdays.
But any other questions that you guys have before we hop off here? I'm gonna give it a few seconds because again, I know that Instagram is delayed when it comes to us speaking live and you guys getting that information set. But bro, I really strongly appreciate your time. All the info that you have dropped. There's a lot of info that again I didn't even know myself that you shared. So definitely appreciate that. Yeah, we gotta run this back though, bro. We gotta run this back. This shit was amazing.
Oh yeah, and this is entry level too. So
yeah,
this is entry level. So yeah, the main thing is, guys, just get started. It's not as complicated as they make it seem, and you got to think about the long term, right? You got to think about how much buying an asset like property changes your life, literally. Of course, there's the financial aspect of it, where you can make money if you're buying an investment property, but there's also, it provides security. It provides a sense of security of knowing, this is mine. Where rent goes up. H talks about it all the time as far as what the average rent in New York is, $3,500 to $5,000. If you get a fixed payment on your mortgage, it's not going up. You know what your payment is every month. So you're locking in. As time goes on, these properties are getting smaller and more expensive. So you get that property now, and you're talking about for your kids. It's a savings account. If you want to talk about generational wealth, that's what it is. This is it. You pass it down to your kids. If they want to go to college, they could pull money out that property. You buy a property and it goes up in value. You can pull money out, pay off your car, reduce your expenses, pay back that loan, and you're still living in the property. It's one of the best investments there is. Where can you live somewhere? Because you have to live somewhere anyway and still make money on it at the same time.
Absolutely.
It's rare. So I'd say just get started. It's not as complicated. If you talk to the right people, it doesn't have to be me. I'm being honest. Whatever market you're in, tap in with an agent that knows what they're doing and let them explain it to you properly on how you can really get to where you want to go. And there is a solution for everyone. Promise you, regardless of what you make. And if there's not a solution right now, there will be as far as getting your credit right. And they could guide you through that. They could put you in the right contacts of people who need to help you get your credit right. Okay, you can't buy in Manhattan, but you could buy in Queens. And they can be able to tell you, all right, this is what you could do. That's it. So get started.
Whew. All right, we're gonna wrap it up right there, just like that. We're gonna wrap it up there. So again, bro, appreciate you joining. Appreciate everyone who actually stuck around to the end. And if you have not stuck around to the end, this is gonna be a replay. It's gonna be released on YouTube. I'm gonna push for 12 p.m. Eastern Standard Time on Wednesday, which is tomorrow. Do you have a meetup group in here in Queens that have any of these conversations? All right. So last question before we hop off. So Michelle asks, do you have a meetup group here in Queens that have any of these conversations?
I don't have a meetup, but I'll tell you what, if enough of, H's people says like they want to, meet up, do an event, I'll put something together and
That's
I'll throw
love.
something on.
That's love. That's love. Appreciate that. So if you guys are not here, definitely want to reach out to him. Reach out to me as well, and we can find out how we can make that happen and put that whole group together. But again,
Yeah.
bro, I do appreciate your time. And just drop your handles one more time, just in case some,
I'll put in the chat just in case so that they could see it. There you go.
All right. So then also, this shit is amazing. This show is amazing. I appreciate it. And again, this episode is recorded. It's gonna be out tomorrow. One last time, appreciate everyone who stuck around, for this call. Jay, I do appreciate you sharing your time here.
Absolutely.
Appreciate you sharing your gems. And again, like just before we wrap off, the fact that he even said all that he shared was entry level, that right there shows just how valuable it's going to be when you make the decision to work with him. And it's not hard to go about doing that. All you gotta do is contact him, reach out to him, go to his link in his bio. Check to see which program and what does he have that's beneficial for you. Take that step, book that call, speak to him, and let's get that going. So, guys, peace out.
Appreciate you having me.
Hit you up right after, man. All right.
All right.
Later, guys.